Our journey begins in the aftermath of World War II, a pivotal moment that marked the beginning of a new global order led by the United States. It was a time when the US emerged as a dominant force. It was armed with substantial gold reserves, unmatched military might, and also the power of the nuclear arsenal. This newfound dominance wasn't just about territorial gains or political leverage. It reshaped global economics and politics. History has a rhythm, and it often repeats its patterns. In the years of peace and prosperity that followed, the US witnessed an explosion of wealth and economic growth. However, with prosperity came disparity and debts. As we progressed, this imbalance only deepened, leading to a widening gap between the rich and the poor, and a gradual shift in economic dynamics. Let's take a plunge into the current state of the US economy. It's like untangling a really complicated web. Picture this. People are spending big. There's a mountain of national debt, and on top of that, there's a whole lot of borrowing going on, which is quite the mix, isn't it? The US is balancing its hefty spending habits against an ever-growing pile of debt, somewhat like a daring acrobat, hoping their skill will outmatch the potential for a fall. This is where Ray Dalio steps into the picture. He's known for his sharp insights and uncanny ability to forecast economic trends, and Dalio has a history of hitting the nail on the head with his predictions. Think back to the 2008 financial meltdown. Dalio didn't just stumble upon this prediction, he read the signs and sounded the alarm well in advance. He's like a seasoned captain, skillfully navigating the complex currents of global finance, drawing on a wealth of data, from national debt levels to inflation rates and beyond, to chart the course of the economy. But Dalio's analysis doesn't stop at the US borders. His approach is more holistic with this, and it encompasses a global view that takes into account international trade dynamics, geopolitical shifts, and even the subtle undercurrents of political change. When a financial guru like Dalio raises a cautionary flag about the potential downturns in the US economy, it's more like a weather expert predicting a storm. It's wise to take notice. His track record is impressive, and it is a ledger of foresight and understanding. Dalio isn't merely speculating, he is identifying the patterns, reading between the lines of economic data, and he's signaling potential challenges that could transcend a mere economic hiccup. He's suggesting that the US might be approaching more than just a few bumps on the road. It could be heading towards a significant downturn that has the potential to ripple across the globe, affecting markets, livelihoods, and the broader economic landscape. Dalio's insights offer a crucial lens through which to view the current state and potential future of the US economy. His warnings are not just cautionary stories, but rather they are grounded in a deep understanding of economic trends and patterns. As we navigate these uncertain economic waters, Dalio's forecasts could be the beacon that guides us through potentially turbulent times ahead. Ray Dalio's take on the US economy is not just raising an alarm, he's thoroughly explaining why he believes the US is steering towards a massive economic upheaval. Join us as we sail through the turbulent waves of Dalio's forecasts to discover what lies ahead. Dalio spots several warning signs. Top of the list, the country's spending habits. Imagine the US as a big spender, living it up on a credit card without enough in the bank to pay it off. This creates a mountain of debt that gets steeper by the day. Throw into this mix a good scoop of inflation, and suddenly your dollars aren't stretching as far as they used to. It's like watching your wallet deflate in real time. Now stir in some internal strife. Dalio's not just talking about folks disagreeing, he's highlighting a deep-seated divide that's tugging at the very fabric of the nation. Picture a family feud, but on a national scale, where the disagreement isn't just about viewpoints, but about the core principles of how the country is run. It's like a tug of war, with each side pulling in opposite directions, threatening to rip the rope. He also gives us a history lesson to ponder. He draws parallels to times like the aftermath of World War II, where seismic shifts in global power reshaped the world. It's like he's showing us snapshots from the past to give clues about the future. In essence, Dalio's alert is like a forecast of a looming economic hurricane. He's connecting the dots, the towering debt, the internal tug-of-war, and echoes from history to sketch a scenario that could mean turbulent times ahead for the US economy. If Dalio's forecast is accurate, we're not talking about a minor speed bump. It's more similar to a gaping pit in the road that could jolt the entire nation. So buckle up, according to Dalio, we might be in for a wild ride. Ray Dalio's warning about the potential economic troubles for the US is kind of like seeing dark clouds on the horizon. It's a heads up that something big and possibly bad is brewing. Now let's dive deeper into this scenario and picture what could happen if Dalio's predictions hit the bullseye. Imagine everyday life in the US. If the economy goes south, it's like everyone suddenly tightens their belts. That fancy coffee folks grab on their way to work, maybe they'll start skipping it. And those weekend shopping sprees, more window shopping, less credit card swiping. This ripple effect means businesses, from the corner store to big malls, could see fewer customers. It's like a domino effect, where one piece falls and sets off a chain reaction. Now think about jobs. In a shaky economy, they could become as rare as a solar eclipse. Companies might start cutting back or freezing hiring. This isn't just about numbers on a stock ticker, it's about people wondering how they'll pay their bills. And let's talk about housing. If people are unsure about their financial future, they're less likely to invest in a new home. This could cool down the hot housing market, making it tougher for both sellers and buyers. But here's the global twist. The US economy isn't an island. It's more like a major hub in the global network. If it hits a rough patch, it could send shockwaves across the world. Think about countries that export a lot to the US. They might start feeling the heat as demand drops. This isn't just a local issue, it's a global chain reaction affecting jobs, businesses, and economies worldwide. And in the long run, we might see a major shakeup in global dynamics. If the US economy weakens, its influence and standing on the world stage could take a hit. Countries might start questioning the dominance of the US dollar. It's like reshuffling a deck of cards, where the US might not hold all the aces anymore. So Dalio's warning is like a wake-up call, not just for the US, but for the entire world. It's a reminder that when the US sneezes, the world could catch a cold. It's about preparing for possible changes and understanding the interconnected nature of our global economy. In a nutshell, it's a heads up to brace for potential changes that could affect us all in ways big and small. He's not just sounding the alarm on a potential economic meltdown in the USA, he's dishing out some tips on how to brace for impact. Firstly, Dalio's big on the whole earn more than you spend mantra. He's telling folks and countries alike to keep an eye on the balance sheets. You can't be splurging more than what's coming in. It's like trying to fill a bathtub with the drain open. It just doesn't work. Regarding debt, Dalio points out the risks associated with excessive borrowing and insufficient financial backing. This situation could lead to a decrease in money value and trigger inflation. He compares it to the after effects of consuming too much sugar, which may seem pleasant initially but can result in a later crash. For individuals, Dalio recommends a diversified approach to investing. This strategy involves spreading investments across various areas, including options that are protected against inflation. This approach is kind of like preparing for adverse conditions in advance. For businesses and policymakers, Dalio emphasizes the importance of resilience and diversification. He advises businesses to avoid relying heavily on a single product type or market. Policymakers, on the other hand, should aim for reforms that reinforce the economy's foundations, related to proactively addressing potential problems before they escalate. In a nutshell, Dalio's looking at the big picture and saying, folks, it's time to tighten the belts, diversify, and prepare for a bumpy ride. He's not just throwing caution to the wind, he's handing out umbrellas in a storm. So, whether you're managing your piggy bank or running a country, Dalio's advice could be the difference between staying afloat and sinking in these potentially turbulent economic waters. In economic analysis, Ray Dalio's stark warning about the potential collapse of the US economy has certainly stirred up diverse reactions among other experts in the field. Several economists and financial analysts are echoing Dalio's concerns, particularly regarding the growing national debt and the inflationary pressures. They agree that these factors could potentially lead to significant economic downturns. mirroring Dalio's apprehensions. These experts highlight the risks associated with high levels of spending relative to earnings and the devaluation of currency due to inflation. On the other hand, there are experts who adopt a more optimistic stance. They emphasize the resilience and adaptive capacity of the US economy, pointing to its historical ability to overcome financial crises and downturns. These analysts suggest that innovation, technological advancements, and the inherent strengths of the US economic system might mitigate the risks of a severe collapse. Contrarian reviews also emerge, offering alternative interpretations of the economic data and trends. Some analysts argue that while the challenges identified by Dalio are indeed pressing, they may not necessarily lead to an outright collapse. Instead, these experts propose that the US economy may experience a period of adjustment and stabilization rather than a catastrophic downturn. Dalio's warning has prompted a lively debate among economists and financial analysts, with opinions ranging from agreement and concern to more optimistic and contrary perspectives. The diverse range of expert opinions underscores the complexity of predicting economic futures and highlights the various factors that must be considered in assessing the potential trajectory of the US economy. Okay, frugally rich family, it is clear that his insights are a call to attention for both individuals and policymakers. Dalio's deep dive into the complexities of national debt, spending habits, and the dynamics of global economics paints a picture of a potential economic storm on the horizon. His advice is practical and far-reaching. Individuals should diversify their investments and prepare for inflation, while businesses and policymakers need to focus on resilience and adaptability. Dalio's approach is not about fear-mongering, it's about being prepared and making smart, informed decisions in the face of potential economic challenges. As we navigate these uncertain times, Dalio's insights offer valuable guidance. It's a reminder that staying informed and proactive is crucial in weathering any economic challenges that may lie ahead. In essence, Dalio's last warning isn't just a forecast, it's a roadmap for navigating the potential economic turbulence in the USA and beyond. Until we meet again in our next conversation, keep that inner light shining bright, keep nurturing those dreams, and continue to be the extraordinary person that you are. Catch you soon, and don't forget, subscribe and join us as we turn the page to the next chapter. Frugally Rich, signing off.